Hi, this is Roger Smith of the True Blue Lounge, and today with Ask an Advisor we have Carell Brown. Also, I have Steve McDonald, the co-host. As always, please like, subscribe, and tell a friend. Without further ado, here is Carell and Steve.
Hi, good evening, good afternoon, and good morning, wherever you are. Just want to take to say thank you for tuning in to Ask an Advisor, and also thank you to Carell for deciding to join us today as we discuss life insurance, and more specifically, life insurance in Jamaica. So, for me, my background is in the financial services. I am a chartered life underwriter, certified financial planner, financial management advisor, fellow for Life Management Institute, and also elder planner counselor. I don't say that all of those to impress you, but to impress upon you that we're trying to help as best as possible to give financial and advice where insurance or financial products are concerned. Today, we are lucky to have Carell Brown with us. She is a Guardian Life representative working outside of Jamaica, working in Jamaica and helping our clients there. She resides, she works out of the Montego Bay office. And Carell, it's nice having you. And tell us about your practice and what you do and how people can reach you and some of the services that you provide.
Okay, as I say, my name is Carell Brown. I'm with Guardian Life Limited and I work out of the Montego Bay branch. At Guardian Life, we offer life insurance, and life insurance, as we say, it's income replacement. It is about looking about your family. Life insurance is not about you. Life insurance is about creating generational wealth for your family. We also offer critical illness. Critical illness does not replace health insurance, but it helps in time when you need financial assistance, when you are diagnosed with, say, cancer, stroke, heart attack, you have a coma. Those are critical illnesses, and those cost a lot in Jamaica. It's very expensive in Jamaica. So having a critical illness plan is very good. Also, a critical illness plan is a living benefit plan. So if you do not make a claim, then at the end of the day, it's either a refund of premium to you as a living person or to your beneficiary at death.
So just to pause, when you say a living benefit, it means that you don't have to die to collect it?
No.
Okay.
No.
Yeah, because you guys always say, you never seem to be able to work out for us who are alive. Just have to die first and then. So this one is while you're alive, yes, you can get some
definitely
benefit.
The critical illness is a living benefit.
Okay. So
you're diagnosed with cancer, you have an exemption period. You have a 6-month elimination period. And you must not have any pre-existing conditions to be qualified for the critical illness.
So like diabetes, you can have diabetes and qualify?
Yes, you can have diabetes and qualify.
Okay.
Yes. But you cannot say have an abnormal PSA or abnormal pap smear and qualify.
Okay. That items that more or less relate to the critical illness.
Yes, definitely.
Okay.
Definitely.
So just to so is there like a screening process? Like, do you guys ask a series of questions? Because yes, what I may believe is pre-existing. You might say is not pre-existing, like the diabetes or hypertension and all of that. So like, walk me through the process in terms of getting critical illness.
Well, we would normally ask questions. As I say, would ask questions for any abnormal PSA, pap smear, HIV, anything that can become cancer. If you have ever had a stroke, what else we ask? Anything that
like
relates
medical
to
questions then?
Yes, anything that relates to the kidney.
So is it like you, so let's say I contact you as somebody want critical illness then. Is it that you do an application and then you have a series of questions that you ask?
Definitely.
Okay, all right. And it's not like you pass it on to a medical person, the medical person will call you and ask you these questions.
No, no. We have two kinds of critical illness plans. We have one that does not require a medical professional to get involved.
Okay,
Yes.
okay.
So
So,
there's
like,
one,
tell
there's
me
one
about that one.
which one?
The one that doesn't require the medical professional.
Well, that one we offer recover 10 critical illness under that plan, which
Okay.
is cancer, stroke, heart attack, loss of speech, coma, deafness, any autoimmune disease.
So, like, the main ones then. The
Yes, the
main and the
main
more
one.
popular
Yes,
critical
yes,
illness. Okay.
yes, yes.
Okay.
And that one does not require a medical professional.
So you ask a series of questions,
Yes, upon
and
application.
if you answer no to the questions, is it that you then get it? The critical
Yes,
illness?
as long as you answer no to all the 10 questions that we ask.
Okay. You then
If
get the critical
anytime
illness.
there's a yes, then you're exempted. You cannot
You
get it.
can't get that one. You're
No.
disqualified. Okay.
Yes.
Okay. So in terms of the qualification process, the questions that you ask is more or less that qualification that you use to determine if you qualify. Now,
Definitely.
what are they, but you have, so with that one, you can't have a claim on it within 6 months. Is that what?
No, not within 6 months.
Okay.
Your,
So if you
your
have a claim on
it
it
must be
within 6
after
months,
6 months. Yes.
it's a refund of premium.
Is that
If the
yes?
first 6 months. Okay. Okay.
Yes.
All right.
Definitely.
And is there a maximum, minimum coverage, minimum
Yes.
amount?
Yes. A minimum coverage of 4 million and a maximum of 15.
15 million. Okay.
Yes.
So
Yes.
suppose I want more than 15. Suppose I want more than, let's say I want 20 or 50 million dollars. How?
Not in critical illness. In life insurance, you can get that coverage, but not in critical illness.
Not in critical
So
illness.
you would have to go to our competitor to get
Okay.
the other. Yes.
Okay,
Yes.
but just come back to, you said there were two types. So what is the other one that you have for critical illness?
The other one covers 20 illnesses.
Okay.
That one requires you to do a medical, requires some lab
A
work.
doctor or so?
Yes, a doctor. Yes, definitely.
Okay. And the
Definitely.
coverage amount remains the same?
No, the coverage for that one is 40 million.
Okay, okay. So you can get more than you can get up to 40 million, but just a different type of a policy.
Yes.
Okay, understood.
Yes.
So the simplified version, if I can call it that, or the quick issue version, if I can call it that, is up to 15 million.
15 million, yes.
And then the other one, which is a more comprehensive underwriting, where
Definitely.
it has to it is you have to get a medical doctor fill out the questionnaire, and I would
Yes.
guess it has to be reviewed by your underwriting
The right.
department.
Yes.
And
Yes.
okay, and then that coverage would not take immediate effect until it is approved by the underwriters, right? Is that something like how it
We
works?
still have a 6-month waiting period
There's
also.
still a 6 months waiting
Yes,
period on
yes,
that one?
yes.
Okay.
So when application is approved, there's still a 6-month waiting period
Okay.
before you
Okay,
can
understood.
make a claim.
And the premiums will, I guess, will be a bit more on
Yes,
that one. And
definitely.
in terms of premium, you can pay it like monthly, bi-weekly, or weekly,
No.
or
The premium is calculated either on a monthly basis, quarterly, half yearly, or annually.
okay.
That's how it is being calculated.
Okay.
Depends on where you work, then the deduction is done differently.
Okay. Okay. So, and then I can just set up something with you guys just to take it out of my bank account, more or less.
Definitely from your bank account, or if you work with a company that does salary deduction, and it is one of those companies that is recognized by Guardian as a salary deduction center, then yes,
Okay.
it can go through salary deduction.
Okay. Okay. Fair enough. Fair enough. Now, in terms of the coverage, how long does the coverage last for? Is it until age 65, until 100?
No, up to age 75.
Okay. So all of them are up to 875?
Yes.
Okay, nice, nice.
And if there's no claim at age 75 for the one that does not require medical, it's a refund of premium.
Oh, wow. Oh,
So
wow. So
it's a
that's a,
savings at the end of the day for you.
yeah, so that's very good in terms of you can actually get back your money at that time frame
Yes.
at 875, right? Okay, so that's good. Can you get back your money before, or do you have to wait until 75?
The only way you can get back that cash before is either through debt as a refund to your beneficiary or as a claim,
Okay,
as a
understood.
critical illness claim.
I got a
Right,
quick
right.
question, guys.
Go
So,
ahead.
so Carell, have you ever seen in your experience where someone put misinformation on their application, and because of that, an investigation was done and the person wasn't paid out?
Definitely, yes. That's non-disclosure, and it
Okay.
is in your contract. Non-disclosure, there's no payout or no refund of premium.
Wow. And you've seen that several times. Is it pretty popular or not?
That's not popular.
Okay. Go ahead, Steve.
Awesome. All right, good. So that's good to know where for critical illness. I want to just circle back a quick minute just to go back to life insurance.
Yes,
So just to cover the life insurance. Now, I know that there are different type of life insurance. You have term, universal life, whole life,
yes.
those different type. Like what type of life insurance do you sell on a normal basis?
It term, whole life,
Universal
depends
life?
on universal life. It depends on what the need of the client
Okay, so
and
you can they can
affordability.
buy all of them through you.
Definitely,
Oh,
definitely,
okay. Okay,
definitely,
good.
definitely.
So with that being said, if you had a young dad, um, 20 years or so or whatever age, and he has a young family and he wanted to get a term 20 insurance, or let me ask it this way, what different type of terms do you have? Like term 10, term
Yes,
5,
top
term
five,
15?
5, 10, 15, 20, 25.
Oh wow, that's good. That's good. So if somebody who have a young family and want to protect their family's income, their income or the income for the family for let's say 25 years, they can buy a term 25
Definitely.
for that time frame. And just for the benefit of our viewers, what I mean by that is typically if you're earning let's say 100,000, I'm just going to use $1 million for Jamaica. I think this probably might be a bit more realistic. You're earning $1 million, and when you're trying to determine the amount of coverage, you'll be bringing in $1 million for that 25 period. So a simple calculation is just multiply the $1 million by 25 to cover that time frame. So you have $25 million. If you have additional debts that you want to tack on it too, you can from that perspective. But just income replacement for that, Carell had spoken to it earlier, which is replacing, heaven forbid you should pass away. This insurance can be used to replace your income. And it's one of the most inexpensive form of insurance that exists, the term insurance. Now,
Definitely.
yeah, with most term insurance, you don't bill cash value. So depending on
No,
what you need, you have to keep that in mind. But I would suspect, do you have a lot of 25-year term insurance for mortgages? Do people buy that?
definitely.
Okay.
Yes, yes, yes. And another thing to note with the term policies is that you are able to convert it to a whole life policy.
Understood. Beautiful, beautiful. So,
Yes,
so, so, viewers, if even the event that, heaven forbid, one of you pass away in terms of whoever's paying that mortgage, and heaven forbid that it should ever happen, then the death benefit will be paid out. Your mortgage can be paid off from that perspective. So that
definitely.
is specifically what was mentioning. But let's say you take it out and you develop diabetes like me, right? And you may have issues getting insurance as you age. Carell just mentioned something that was very important, that you can convert the policy to what's called a permanent insurance. Tell us a bit more about that what a permanent insurance is, Carol, if you don't mind.
Okay, as it says, the term insurance says for 10 years. So at the end of 10 years, you will no longer have a coverage. But in converting it to a whole life, then it goes right up until death. And in conversion, as you say, you might develop an illness over that 10-year period. We does not ask for any insurability. So you don't need to prove insurability then to convert that term policy.
Right.
So no medical question will be asked, nothing will be asked. It will be converted to a whole life. Whether you have cancer, you have HIV, whatever your illness is, it will be converted to a whole life and goes up until death. So it no longer ends at the 10-year.
Right. And when you say insurability, just for the benefit of the viewers and listeners, insurability is that when you go to purchase life insurance from the insurance company, they do a screening process and they want to see your state of health. And that's what's referred to as insurability. So if you have cancer, if you have any illness that is probably terminal, if I would say terminal, you would more than likely not get insurance. You won't necessarily, you could still get insurance if you do have an illness, but then, and you can correct me if I'm wrong, Carol, but that is when they put you in a class, refer to it as being rated. Right?
Definitely.
Right. So if you have an illness like diabetes or hypertension, then they group you together with other people who have that similar illness and charge you a bit more for that, because I would suspect what they're saying is that the risk or the probability of you dying sooner than the healthy person is a lot higher. Right? Okay, good. So you're saying now with the term insurance, you do the insurability part of it when you're much younger. Right? So you're healthy at that time. So later on, if my bad drinking habits, I'm hanging out with Roger too much secondhand smoking and drinking and all of that, and that catch up to me, I don't have to worry about my medical situation or being denied the insurance because I'm not. Okay, good. Okay. Thanks, Carol. So when we do that conversion, which I think is an awesome thing, how does the premium change, or do I pay the same premium that I had before? How does that work?
No, the premium changes because you would be older. Say it's a 10-year term plan and you convert at year 5, then you're 5 years older. So the premium would definitely change.
Okay. So that's the only time that the premium would change, right? It went up on that. So if I had a 25-year term, would the premium change during that time, during the 25-year term?
No, the premium would not change during the 25-year term. But if you have a 5-year term that can roll over into another 5-year, then your premium changes because every 5 year, definitely. So it depends on the term plan that you take.
Okay. And I would presume that the 5-year term would be a lot less in terms of costs compared to the 25-year term, right? Is that the case? Okay.
Yes.
So let's say for affordability purposes, I may want to take out a 5-year term, and especially if I'm doing probably a 5-year loan or something like that, that's probably when I would want to take out a 5-year term, eh?
Not necessarily for loan purpose. Remember, the whole focus of life insurance is income replacement. So if you cannot afford the whole life, then you can take a term plan until when your financial position changes, then you can convert it to a whole life. So it's not just necessarily that term plans or for mortgage purposes.
Right. Yes. Okay, but if I take on, let's say I take on a debt, for example, I'm doing I'm investing. I have some full farm down Old Harbor, so to speak, right? And I have a 5-year loan, and it's a large amount. I could get like a 5-year term for that.
Definitely.
Okay. And then so from that perspective, heaven forbid, I should pass away during that time frame, it would have automatically paid off that
Definitely.
loan. Okay, okay, good, good,
Because that
good.
term plan would have been assigned to the bank.
Okay, okay, I get it. I get it from that perspective.
Yes.
No, when we so that bring up another thing. So let's say I die in year 4, and 4/5 of my loan has already been paid off, and it's assigned to the bank. Does the bank get the full amount, or just the outstanding balance?
No, the full amount would be paid to the bank, and then the bank would take what you owe them, and then the difference goes back to the beneficiary.
Okay, okay, okay. So, so that's an important thing you mentioned, the beneficiary. So, you recommend, as part of your practice, do you normally recommend a name beneficiary, or do you just put estate? How do you deal with that aspect of
No,
it?
we do not use estate. We use name beneficiaries.
Hmm. And what if I don't want it to go to any of my baby mothers them, I want it to go to my children them, and but there's under 16. How does that work?
You have to name a trustee. As
Oh,
long as you're under 18, you have to name a trustee.
okay, okay. And I
Yeah.
can name one of the one of my baby mother for the trustee in those instances.
Yes, or just about anybody.
Okay, okay. Even if there's no relationship, so we
If
can name
there's no
Roger.
relation. Exactly. The person that
Uh,
you trust.
okay, 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 good. As you talk about that, suppose I want to take out insurance on somebody like Roger. How does that work? I can just buy a policy on Roger.
No, not without Roger's consent, because Roger
Oh,
has to sign the paperwork
as the insured.
as the insured. So not without his consent.
Okay, okay. Because I guess you can also use something like that with business partners.
Yes. Yes.
Right.
Keyman Insurance.
Oh, okay. Keyman Insurance. So,
Yes.
so, tell me a bit more about that.
Well, the Keyman Insurance is where, say it's a partnership, both partners will have equal value insurance coverage to protect the business.
Okay. And possibly to buy out the other person's share, right?
Uh,
Because if like for me, we use the term partnership loosely, but it could be a limited liability company too, eh? Because if I have if Roger and I are shareholders 50/50, and it's 25 mil, and he has 25 mil too, that's what the business value. No, and I want the shares, my shares, to go to my brother. But Roger don't really like my brother and or my wife, but he doesn't think that that would help the business. So we could set up some, I guess, buy-sell agreement where that Keyman Insurance would be able to use to buy out the other person's share.
that part of it, Guardian would not be involved in.
Oh, okay.
Our job is just to provide the life insurance coverage for both partners.
Okay, okay, okay.
That part would be the legal aspect side of it.
Okay, so the
Yes.
buy-sell agreement and all of
Yes.
that.
Yes.
Okay, so there would be Keyman Insurance, like would be if I have my foreman then. My foreman is very good in the business. So the business can then take out insurance on my foreman.
Yes.
Right? So because if he pass away, I mean, both Roger and I, we don't know nothing about what going in the business. We're far removed from what actually happened. on the floor. So then what we could do is to use the proceeds from the insurance to hire someone who already know about the business.
Definitely.
Okay. So that would be the Keyman. And then I guess what I was talking about was the buy-sell agreement between shareholders, where two shareholders can buy out each other portion. So it's just about having the appropriate amount of insurance in place to do that. Interesting. And then, we can use the different type of insurance where that is concerned. And also, I guess too, what about like the business taking out insurance on the business owner so that if he pass away, any debt and all of that can be paid. Can that happen? And then the business is a beneficiary of the life insurance, so the money will be paid to the business.
No,
Okay.
not in that case. It's individual.
It has to be on an individual basis.
Yes.
Okay. All right. Fair enough. In terms of you mentioned whole life, and we had spoken about universal life. For those who may not know what a universal life is, could you just explain it for us, if you don't mind?
The universal life insurance is an insurance coverage that gives you life insurance. It gives you some investment attached to it, and it might also give you some critical illness attached to it. So it covers just about everything in one package.
Oh wow. Okay, so you can have the life insurance, and you can have the critical illness, you can have the investments too. So it's like one of them hybrid something.
Yes.
Okay, nice. And then that will it's the so I guess it's what I'm calling a la carte. Roger, you always got them fancy place a la carte where you can pick and choose on what you want, right?
Supposedly.
Okay, all right. So so I would come in as a client and I say, you know what, Carell, I want $5 million worth of insurance. So we work it out together that I need $5 million worth of insurance for income replacement. And then you say, boy, you know what? I think you should get some critical illness too, right? And you tell me. So how that would work? You just tell me what it is, and then you will add it on, or
Yeah. I'll do a fact finding with you to establish your disposable income, and also to
if I can afford it.
Yes. Because
Okay.
that is one of the main factors in purchasing life insurance. It's about if you can afford to pay it.
Right, to pay the regular premium. Okay. So let's say I have Roger money, right? I can't afford anything. So, Bill Gates type of money, Roger money. So that's so money affordability is not a problem.
Affordability
No,
is the problem.
right. So then in terms of you would then look at what would you look at adding, and what's the reason why?
We'll look at your family, how many children, ages, university. We'll take all of that into consideration. We'll look at your income and what your expenditure for your expenses for the month. So
Right.
we factor in that in factoring how much life insurance you would need down the road for a
To
10
cover.
year or a 20 year. Yes.
Right. The
Yes.
wife and the children, how much the
Definitely.
household would need. Okay.
Definitely.
Okay. And the critical illness part now, how that will come in.
The critical illness part is then it's about now, the life insured.
Mm-hmm.
If you have health insurance, no. Then we'll say, God forbid, you are diagnosed with cancer. We know the cost to the health cost for cancer. Looking at, say, $15-20 million easily.
Mm-hmm. Mm-hmm.
So as long as you can afford it, then we'll tell you, go for the maximum.
Okay. Okay, understood.
I have a question.
Yeah, go ahead.
So, Carell, how does it work with suicide and murder when you have a life claim? And my
Life claim. Okay, for suicide, if it's within 2 years of having the insurance in place, we only pay a refund of premium. For murder, it is being paid, but you have to, it is being paid, but it is being paid after all the work is being done on the police side of it. All that information is gathered, and autopsy report, just about all of that is required to make that claim.
okay.
Mm.
And my next question to you is, say for example, someone's got a life policy and they've been paying religiously for 20 years, and all of a sudden they get to a stage where they can't make the payments for a month and a half, and something happens. Does the insurance company give that person a bly and pay, knowing that person paid for 20 years, or the fact that the person may have missed a month or 2 weeks, would they get put in a hard situation because of it?
Well, with our policy, all our policies, we have a 30-day grace period. So within that 30 days, if your policy payment is due the 1st of January, come the 1st of January, you did not pay it, you have until the 1st of February to make that payment.
Okay. And if you
Yes.
don't, and if you
So if
can't,
that occur within that 30 days, it is still paid out.
but what about if you're in a situation where you can't pay, hard life take you just before
And
you
you
die?
can't pay for how long?
Say you couldn't pay for the last 3 months, and then you cock it and you're dead.
Ain't
Well,
no, you know the song we say, ain't no romance without finance. So you have to have a job, or you have to have money. But
well,
anyway,
if it is if it is a policy that has investment on it, the system would automatically takes the premium from the investment and updates it.
so
Oh,
with that, but Roger, coming back, if it's one of the term policies that we're talking about, so what Carl said is very important for everyone. So if it's one of the term policies that doesn't have cash value, then
Yes,
it means that your policy would go into what's called a lapse state. Now,
definitely.
if it does lapse, Carol, the persons want to, let's say, as Roger mentioned, they got laid off, but 3 months afterwards, or 6 months, or is there a time frame that they can get it back up and running, and what's the procedure to do that?
Yes, they can get it back reinstated. They have some policies are 6 months, some are 12 months. So you can pay up what you owe.
Your
There's a
back
form
premium.
that you sign. Yes, the back premium, and there's a form that you would sign and have it reinstated.
Would it be subject to medical again?
If it's a medical plan and you were rated, yes, you are subject to medical.
So let's say it's a life plan, it's a life
Mm.
insurance plan, and you weren't rated when you got it, right? But no, so when you go back to reinstate it, so let's say it's a term 25, but you weren't rated. When you go back to for the insurance, with the you say you have to fill out a form. Are there any medical questions
Reinstatement
on the
form
form?
asks medical questions, definitely.
Okay.
Definitely.
So there would be medical questions to
Questions,
ask
yes.
if
And
has your health changed since
yes.
okay. So
And
there are
based
some
on those
medical.
answers, then the underwriting team will decide whether you need to do a medical or not. But as
Okay.
long as you were rated, then you have to do a medical.
Okay. That's automatic.
Yes.
Okay. Okay. And if in the instance that you would that also apply to the critical illness too, or Is the
Yes,
same?
it also applies to the critical
Okay.
illness. Yes.
All right. So you mentioned that if you have, if your policy has cash value, so I'm presuming the policies that has cash value would be your universal life and your whole life plans, right?
Yes.
And then if they have cash value, they can go and use the cash value to pay the premium. Was that my understanding
You
correct?
can either do it or the system automatically applies it.
Right. So I can tell you, Carl, you know, not now going for me this month. I don't really have no money, but some money up on the policy. Can you use the money up on the policy for pay up it?
In that case, you would have to sign a form to take that cash off to pay back to the policy as premium.
Okay. Or it just automatically do it itself.
Yes, or it just automatically do it itself.
Okay, I get you. Okay. Well, that's definitely good to know. So just coming back to the universal life plan, so we can mix and match, so to speak. You have the base plan that goes to age 100.
Yes.
And then can you put on term on it too? Can you attach term to it?
Yes, you can.
Okay. So in theory, I can have a plan, let's say for $10 million, and that as my base plan. And then because I know I have the mortgage for $30 million, I put on the mortgage as a 25-year term. So my
Yes.
total coverage would be 40 million or 45 million. And then if I knew that I had some other thing going on, I can put on some term 10 on it too, or and in addition, I can also put on some critical illness you mentioned.
Yes.
Okay. And at the same point, you mentioned investment. Go
You
ahead.
can use the critical illness for mortgage purpose.
Okay, understood. So you mentioned that you had investment attached to it. How does that work?
Most of our plans has what we call a saving component that is attached to it.
Mm-hmm. Most of the universal life plan, not the term plan, or the term plan too.
No, not the term plans.
Okay, so most of the universal life plan has a savings component. So
yes.
how does that, like, how much interest may I get upon a savings component? How do I invest in like RGL stocks or mutual funds or unit trust? How does that saving component work?
It is invested in stocks and bonds, and the clients cannot really say you want to put it in RGR or you want to put it in
Specific.
company or
Right.
what. Yes, the company has 5 different units that they
Five
invest
different portfolios that you can choose from.
that they definitely.
Okay. So how are the portfolios determined? Are the portfolios like conservative, balance, or medium risk, and then growth high risk? What's the difference between the portfolios off the top of your head?
Well, it is more medium risk, and the growth is good.
Okay. What is good? Tell me, since you mentioned good.
All right. Say for the blue chip, 5 years ago, say, I'm on my laptop, so I can't.
No, just approximate off the top of your head. Nobody now check us for accuracy.
Okay.
Yeah, just off the top of your head.
Say it was $800 5 years ago. It is now say $1,050 paying out now.
Okay.
Yes.
Okay. So
Per unit.
Okay. So it's not like a percentage return then that you would get over the past 5 years. You would have earned like 10% of your money or 5% or whatever.
No. It's the price of the unit.
Okay, understood. But you will, when the person come, you will work through that with the individual, and you will do a projection to say, okay, you're investing now in this is the investment component, And this is how it will grow year 1, year 2, year 3, year 4, year 5.
Yes, which is a projection. As you
Yeah,
know, things can change.
of course, of course.
For
We can't
example,
have
like
another.
COVID,
We can't
that
have another COVID or another Melissa or another.
ex-
I don't even remember the one. Beryl. Yeah, Beryl.
yes,
Right. So yeah, anything can change. It's all
yes,
projection. Okay, awesome. And all right, so that's definitely good to know. And we did say that you can assign the life insurance to the bank for like mortgages or any loan purposes, right? We mentioned, okay, good, but not the critical illness component. I remember
no.
you saying that. No, you mentioned investment. Do you have any other type of investment programs like pension related or anything like that?
Yes, we offer individual pension. As long as you're not a part of any pension scheme, then you can have your own personal individual pension, which is 20% of your gross income.
Okay, so how does that work? Walk me through it. I just walk into your office and say, tell me about your pension program.
All right. We have a pension plan that pays out at age 65. As long as you are not a member of any registered pension scheme already, because in Jamaica, you're only allowed to have one pension plan. So as
Mm.
long as you are not registered to a pension scheme, you can sign up for your individual. So you're self-employed, you can have a pension plan, 20% of your earning. So you tell us what your gross earning is, we calculate that 20%, and we complete an application form and you'll pay that monthly. With the
Okay.
pension plan, it cannot lapse. So if you stop paying it, it will not lapse, unlike the life
Okay.
insurance.
Okay. So
And you
when you
will
say
not get back that money until you're age 65.
okay, so it's almost it's a registered, more or less like a registered government, official government pension program then, but
Definitely.
just being handled outside of your normal work.
Yes.
Oh, so that's good. So it's something that definitely self-employed people can. So when you say 20% of your salary, do you mean that you can contribute up to 20% of your salary,
Up
or
to
it
20.
gives you 20% of your salary?
You can contribute up to 20% of your salary, anywhere between with a minimum of 10 and a maximum of 20%
That you
of
can contribute.
that you can
Wow,
contribute
that's
monthly.
awesome. That's awesome. So the from that regards then, but all right, so we do that. I sign up, I do that. And so like what's the next step? How is that invested? How tell me, I mean, how it
Is
works?
invested just it in the same 5 funds that the investment from the life insurance invested in, is the same 5 funds that the pension fund is invested in.
Hmm. Okay. And so I guess you guys would do a projection to say how much it's expected to be if I'm 45, how much is expected to be when I'm 65.
Yes, yes, can give you a project.
Okay. Okay. So I'm curious. Tell me now. So we've seen how is it like a segregated funds with the company? And where I'm going with this now, we've seen the financial services collapse back in the 90s, and we've seen NCB having some problems and all of that. We've seen who was it? Air Jamaica, them having issues with that. Air Jamaica staff have to take them workers to have to take the company for them pension fund, all of that. I'm curious as to the legislation surrounding that. Is it a part of Guardian overall fund? Like if Guardian goes down, if it is because you guys are owned by a Trinidadian company, right?
Yes.
Yeah. So how does that? How does the whole pension? If you guys are no longer around, what happened to my money? All right.
That is a good question, but unfortunately, I cannot answer that one.
Okay, all right. Whenever I know you're doing some traveling now, but whenever you get back, I would love to
Yes,
hear how that work, that aspect of it work.
yes.
Because I'm just curious. So, apart from that though, are the let's say I want to set up a mutual fund, is it something that you would do or one of your colleagues would do from an investment perspective?
We we don't do mutual funds.
Okay.
No.
Okay. Okay. All right. So just the life insurance aspect of
Yes.
it. All
Yes.
right. Okay. I get it. All right. I really want to thank you for taking the time to explain your practice and the type of products that you offer. It was extremely informative. And I would certainly encourage everyone to reach out to you for assistance. And I started out in life insurance. That's where my journey started in Jamaican life insurance. And I know the value of life insurance. I've had the privilege and the pain and sorrow of having to deliver a few debt checks
Yes.
that benefit during my lifetime when I was there. And I say privilege because I saw how it kept the family going and the
Definitely.
benefit and how it helped that family afterwards
Definitely.
that the breadwinner passed. And the sorrow in terms of the person passing away. But I know that because of what they did and the services that I offered, um, we were able to help them. And I know life insurance is something that, as they say, something that we have to sell. It's not something that people normally go and buy.
Yes. It's not no.
So, you know,
It's
as a fellow life insurance person, I thank you for your service and continuing to do what you're doing. And just encourage everyone to reach out to you to at least get an assessment, a fact finding assessment done to see if they're underinsured or if they have adequate insurance from that perspective and how you may be able to assist them. Carell, tell me or let us know in what your contact information is. If someone wants to reach you, how can they get in touch with you? Your phone number, email address, and physical address.
I can be contacted at 876-438-3015. So that's 876-438-3015. Or I can be contacted through my email, and that's kharel.brown at myguardiangroup.com. So that's KHAREL dot BROWN. So that's my name, Carell.brown at myguardiangroup.com. That's my email address.
Thank you very much, Carell. And your office, if they want to come and meet you in your office is located in Montego Bay, correct?
Yes,
Right.
Fairview, Montego Bay.
Right. But if they're not in Montego Bay, I presume that you service all areas of Jamaica.
Yes,
All right. So you can provide insurance service for someone who is living in Kingston or someone who is living in St. Thomas, wherever you'll be able to assist.
definitely.
All right. Do you do like Teams meeting too, or what's the other one? Google Meets meeting? Do you do like Zoom meeting if necessary?
Yes, yes.
Okay.
Zoom
Awesome.
meeting, team meeting, WhatsApp video meeting.
Awesome.
Yes,
All right.
yes.
Carell, it was really a pleasure. Thank you very much for taking the time to share with us and to help us in terms of getting our financial affairs in order. Any last words, Carell?
Thank you for having me. It was a pleasure.
Thank you. Looking forward to talking to you soon. Roger, over to you, my brother.
Hey, thanks very much. This was a really informative show. One little question for you, Carol. When someone really not have no money, how can you sell them insurance?
What you call really don't have any money?
I'm living hand
Then
to
yes,
mouth. I can barely feed myself.
yes, we still can sell your life insurance. That is where the term plans come in place. The term plan is very cheap. It's affordable, and yes, you can get life insurance.
Okay, cool. Thank you very
Even
And
much.
from
Roger,
that
just
hand to mouth, you can cover your family with a
right,
term plan.
just to add to that too, one of the things that I when I used to say that, I would say, you know what, you're my ideal client. Because if you're just living hand to mouth right now, heaven forbid something should happen to you.
Exactly what is going
So,
to happen to the family.
right, if there's anyone who needs it, it is you. Let me look at something that can replace probably not all of your income, but even a part of your income, right? So there's something can always be sold.
Definitely.
And we can always be able to help the client in some way or the other.
Yes, definitely.
All right.
Definitely.
Thank you, guys. Thank you, thank you, thank you.
We have a product and a plan for just about everybody
And every situation.
and every situation.
This is really good. You guys have done really well. You remind me of ministers, of the church.
But
All when the man broke and I say, yes, it's tailor made for you. Anyway,
Exactly.
Roger, marijuana has been decriminalized recently. So if someone smokes marijuana, how does that affect them getting life insurance?
They can get life insurance. What they cannot get is riders. So they will not be able to get the disability income rider, the parental waiver rider. Those riders they cannot get. But yes, they can get life insurance.
Okay. You mentioned, okay, so you can qualify for getting the life insurance. Is that the same for critical illness? You can get critical illness too if
Yes,
you're
definitely. You can get critical illness also.
okay. Well, that's good to know. What about alcohol? Consumption of alcohol, how does that affect it?
Yes, the same applies. You
Okay.
can get life insurance.
Okay. So you just probably asked me how much alcohol I consume and all of that.
Definitely.
Do,
Definitely.
okay, okay. Um, so with the marijuana, would I be classified as a smoker or
Yes, definitely. You're classified as a smoker.
okay? And then the
So
rates
your
are
rate
probably
will be higher, definitely.
okay, okay. So you
You're a
will okay. I
smoker.
could just get it. You mentioned something. I just want to pick up back on real quick. You mentioned disability income rider. Tell us a bit about that, if you don't mind.
You have the disability and dismemberment rider. So that if you become disabled due to any accident, then you can benefit from the disability rider. And on any dismemberment, you can benefit. And if that is by accident and the accident is no fault of yours, that portion is also paid out.
Okay, that's good to know because accidents are we have a lot of accidents and especially those of us from Westmoreland, we have a lot of the bike crashes. So when you say disability income rider, so if I'm in a bike accident and I can no longer walk or I can no longer use my arm or so I'm now in a wheelchair bound. I can get an income each month. Is that what that
No,
means?
it's a once-off payout.
Okay, so I can get a lump sum payout.
Yes, yes.
Okay, okay, okay. And you mentioned the parental waiver rider. Tell me a bit about that.
The parental waiver rider is if you're doing a policy on the life of your child.
Hmm.
With the parental waiver rider is that if anything happened to the parent, then that will come in and will pay the premium until the child is age 18.
Right. So if I the parent pass away, then
Yes,
or what if I'm disabled? That's covered too?
yes, yes,
Oh wow. Oh wow. That's interesting.
yes.
Um
as long
tell
as
me,
there's no income coming in.
right? You mentioned children. Um, do you have educational plan for children too?
Yes, we do offer educational plans for children. We
From
have
like, how does that work?
we have one that is for 15 years that you will pay up for 15 years. At the end of 15 years, it matures, and you will get what is
Whatever that is.
accumulated. Yes, what is accumulated in it.
Okay,
And
and how is that invested?
that one is invested in the blue chip.
Oh, in the blue chip. Okay, okay. Yeah, it would be. And I know you mentioned earlier that you don't have a, you don't know what the returns have been like in the blue chips. But okay, so you would have it in the blue chip. So that's good to know because it's like you're to a partner for the
Yes,
children education. So in 15 years you'll have that.
yes,
That's definitely good to know and definitely something that people can utilize. Have
yes.
people been using it? Do you know?
Definitely, definitely, yes. Persons are using it. And we have a new product out, which is our Guardian Achiever, which is also geared towards university. We're at a child between age 1 to 10, and you have a policy for that child, the Guardian Achiever. When that child reaches age 18, whatever the sum assured is doubled and pay out to you for university purpose at age 18. So for instance, you have a $4 million life insurance plan in place for that child under the Guardian Achiever, a, a 6-year-old child. When the child is 18, a payout of 4 million of 8 million is paid out, and that is
Wow.
guarantee. So that has nothing to do with unit investment, nothing. It's a guarantee payout of $8 million when that child
Wow.
is 18. That's our
Wow.
newest product.
Wow. I must say that a lot has changed since I was there. I was there when Whopper killed Phillips. It was way back in the days, right? I remember critical illness was just coming in at that point in time. And you had ICII, it was LOJ and Island Life back in those times.
Mhm.
Yeah, so it was a different time. Okay.